And joining me now remotely for more on this market is Jeff Weniger, head of equity strategy at Wisdom Tree. Jeff, great to have you on the show this morning. And what is on your radar when it comes to stocks?
Well, thanks for having me. I saw that dog on the trading floor had a pink hat on. It was somebody's having more fun than the two of us. But yeah, look, I mean, this is a broad bull market that continues. It looked like it was getting shaky there for 3 or 4 weeks. And I think we wanted to maybe sell the news of this inauguration. But basically, every sector in the market is in general bull mode, which was not necessarily the case last year, where energy and healthcare were pretty weak. Now those are kind of off to the races as well. You have a little bit of a market rotation of late. Industrials, materials, you do have that crude oil price rising. So it seems like it's a cyclical recovery type play.
Certainly, markets will be tuned into what we hear from Fed Chair Jerome Powell next week. But amid earnings, economic data, the World Economic Forum, the inauguration of President Trump for a second time, there has been no shortage of news events for us to cover. I want to get your take in terms of the Fed outlook and how it might have evolved since its last meeting in December.
Yeah, and look, the other thing about the Fed is that we're getting a lot of inbounds at Wisdom Tree from advisors saying, well, what are you going to do if the Fed should hike? Now, that's not the view at Wisdom Tree, but it's in the conversation, and that's something that's a little intriguing. And I think that that's the reality, is that we are now in this world here where mid 4% Fed funds rate may be the lay of the land for some time to continue. And remember as well, we have the Bank of Japan meeting happening today and tomorrow. So we should get a hike out of them. I think that that's going to be another non-event, materially different, I would say, from the BOJ meeting of last summer.
You know, it's interesting because as the S&P 500 sits right near a record high at the open, down just 0.2%, but again, a very strong run, up more than 50% in the past 2+ years since its bottom. What are the storylines that will drive the markets ahead, Jeff?
Well, I think one of the issues is with the S&P, to just take that gauge as a bench, is that, I was tweeting the other day with the CAPE ratio truly is remarkably high. And so you have this valuation headwind. It's akin to really the fourth quarter of 21. We know that 2022 was not a good year for stocks. The issue, of course, is with valuation, you can't end up using it for a 3 or 6 or 12 month outlook. But I think that the next 5 or 10 years could be something that'll be materially different in terms of just struggling to get big gains in markets. One of the things that I would note here is nobody wants to touch European equities, but European equities have been getting a little bit of love. So maybe in the next few years, it could be something like an international diversification. Get into Europe, get into Japan, get into India, and dare I say, maybe even China. That's another one nobody wants to touch.
Yeah. Emerging markets, developed markets abroad, the U.S., of course. We know the U.S. has been the best house on the block, certainly undervalued perhaps on the international space. How do you weigh those when looking at a portfolio as we start 2025?
Well, you can look at relative valuations. I mean, it's just, if you want to pick any of those off the top of the list, we do a lot of Japan work at Wisdom Tree, so that would be an example of one where the market has rallied. I mean, we got the Nikkei up near 40,000 at this point. It had a good 2 or 3 years there. It's been chopping sideways for about 6 months or so. But you take a Wisdom Tree style index on Japan, you're looking at 12 times forward earnings with actually several nice catalysts for that. You put that up against a 22 times forward multiple, and you compare that to history. That 10-point gap between the U.S. and Japan, and it's wide. It's notably wide. And so we'll see if some of those catalysts for Japan, like basically the retirement program expansion that they're doing there, we will also see the ability to engage hostile takeovers, that type of thing. If that'll catalyze the Nikkei deep into the 40,000s, I think it will.
Interesting. Let's talk more about the U.S. dollar, because amid the turning of the calendar year, we had seen that dollar come back into focus just based on how robust the U.S. economy has been, especially relative to its peers, as we just discussed there. How could that impact the market?
Well, this is one where we think that we are in the consensus, and that is okay. You always want to scratch your head a little bit when you're a dollar bull and everyone else is, and that certainly is the way it feels right now. But it's okay. It's okay. The trends remain in force. You do have a situation where, aside from the Brits, it is the United States where you can get the most yield in the developed world. So there's major yield gaps between, let's say, treasuries and bonds or treasuries and JGBs. And so that is a dollar strength thesis. And look, we are getting the known quantity here. We are going to get tariffs. We had in the last 48, 72 hours, a lot of insinuations of tariffs on Canada, Mexico, and China as expected. These are the things of dollar strength.
Jeff, we so appreciate you joining. A lot to get to this morning. Jeff Weniger is a head of equity strategy at Wisdom Tree. Thank you again.